Hello and welcome to the very first IBS Journal video interview. I'm Scott Thompson, Senior Editor of IBS Journal, and today I'm joined by Gunther Peer of Reval, and we're going to be talking about the hot topic of turning regulation obstacles into business opportunities. Hello, Gunther.
Good morning.
Let's start with the implementation of the Basel III regulatory framework and its impact on notional pooling. We'll start with a sort of two-part question. We'll go to the first bit first. Will it kill notional pooling for corporate treasury?
So I don't think it will kill notional pooling by and large, but we are seeing quite a lot of changes to the product. And we are also seeing that for certain segments of the market, notional pooling is actually going away. The main reason being that, and also with a very late decision now from the IFRIC, is that it's economically not viable for banks anymore, in most cases, to actually offer notional pooling products. The reason being is there is added cost that is driven by Basel III regulation. So there is a good chance that for a lot of treasurers out there, notional pooling products might be discontinued, although I would not say it's going to be killed overall.
Is it fair to say that there remains a lot of confusion in the market as to how the new rules will impact the notional pooling structure?
Yeah, so the way I've perceived it is that a lot of the confusion has actually cleared up. The thing about the Basel III committee and the rules that have been introduced is they all need to be translated into legislation. So it's a set of rules on a global basis. There's still nuances, there's still differences on a domestic basis. And a second layer to that is also that different banks interpret those rules differently. So there might actually be a bit of opportunism when it comes to the actual application of the rules. And this is where still a bit of confusion and a bit of different interpretations are around. But particularly on notional pooling, a lot of the confusion that was there has been cleared up as of mid-April, when a decision was made by the IFRIC to actually state very clear that the offsetting of balances is not going to be a practice that is allowed going forward, and that has that significant cost impact on the bank side, which is essentially going to make it unviable. So still, a lot of different interpretations, but not as much confusion anymore. I think the rules are pretty clear by now.
So still some confusion though. Do you feel more can be done by the regulators, by everyone concerned? Or
I think
is this a sort of thing where you'll never have 100% situation?
Exactly. It's less the regulators, it's really more about the interpretation, it's more about the auditing, it's more about different banks taking different views, different countries taking different views. And then I think it's a situation that is not going to go away easily. That is something that we'll have to adjust going forward.
So that takes us on to the title of the video interview, which was How Can Banks Turn These Regulation Obstacles into Business Opportunities?
Yeah.
There's obviously a lot of regulation weighing down on banks and financial institutions, but increasingly in various areas of the financial services sector in general, a kind of way of thinking that actually what you look at as obstacles could be turned into opportunities.
Sure. Yeah. And still I'm going to zoom in on Basel III, as this is probably the prevalent regulation that causes most of the headaches these days, and we're amidst the implementation. And I'm going to use two client examples to actually demonstrate how Reval could help with overcoming these obstacles and actually turning that into a business opportunity. The first example I'm going to talk about is a Dutch bank that we're working with, super regional actually, and they faced exactly those challenges that we've just talked about. Notional pooling becoming more expensive from a bank's perspective. So the question becomes what to do. What we have already done together with them is to make tweaks and slight changes to the value proposition. One was introducing a haircut on the credit balances. And that's something that's been pretty standard in multi-currency environments already, but also reflects the changes that LCR imposes on the bank. And secondly, also on the cost side towards the client, this introduction of swap costs in a multi-currency environment. So two elements of tweaks, of changes that we're actually able to implement very quickly given the nature of the Reval platform that they were using. The second element to that is also a larger change in terms of the value proposition towards your client. Now, if you want to take notional pooling away because you can't afford to offer it anymore as a bank, you'll start looking for alternatives. And like the natural alternative is cash concentration schemes. But what cash concentration does is imposes more challenges around the intercompany loans that leads you into accounting, that leads you into tax, that leads you even into profit shifting areas that all need to be addressed. Now, for a corporate, that's a project in itself, and that's also moving away from centralized liquidity or from decentralized liquidity into centralized. So that's a set of challenges on its own. But working with the bank, they could actually leverage the Reval platform, where as opposed to before the time they partnered with Reval, they have cash concentration as well as notional pooling in one platform. So the technical shift is actually very easy to do. Secondly, also with the possibility of managing these intercompany loans on behalf of the corporate clients. So this is example number one, really taking an existing value proposition and tweaking it and looking for alternatives there. The second example I want to talk about is a global bank having a very strong footprint in Asia, the Middle East, and Africa. And they actually took a slightly different approach to their business. Again, partnering with Rebal to extend the existing value proposition on liquidity management. And they were able to launch an incentive program, essentially, where they now tailor campaigns to steer client behavior in a favorable way for the bank. So for the bank, taking on corporate deposits becomes a bit more sophisticated because you need to measure the quality of these deposits, essentially. And partnering with Reval, that bank was able to actually do that in a way that favored the balance sheet. And over the course of 3 years since the program is running, they've actually been able to bring in 10 billion in extra corporate deposits directly contributed to the Reval platform. So multiply that with your net interest margin, that gives you a good number of profits.
So corporates are increasingly feeling the effects of globalization and are demanding more advanced capabilities for achieving cash visibility and managing and optimizing their cash. Could you tell us a bit more about Reval's work in this area with banks?
Absolutely, and you're absolutely right. We've actually done a benchmarking study with more than 600 corporates around the globe to ask them about what these challenges are. The most strategic challenges the Treasury actually have are exactly about cash visibility, cash forecasting. So this is really where the focus is. This is still where the struggle is. And with globalization, with companies growing at a fast pace, you bring in extra complexity, you bring in different currencies, different legislations, maybe have merger and acquisition activity, so that strive towards one solution to actually host all your data, to give you that cash visibility, to be able to look into where does my cash sit from a geographic perspective, from a bank's perspective, from a legal entity perspective. Those are really the questions that the corporates ask, and those are also where a lot of spreadsheets are still being worked. They start to break when you get to a certain size. And the banker in that case, when you go through that growth story, is very often that trusted advisor that a corporate turns to and says, well, here's my problem, can you help me with a solution? So we've been working with banks around the globe to address exactly that. And that can be either building on an existing liquidity management infrastructure, or this could be a totally new value proposition where the banker really uses all the data that the bank has, displays that in dashboards, in graphical reports, in drill down ways of really displaying and showing the data to provide exactly that visibility, and also looking into the future, providing means of cash forecasting, again, leveraging the data that exists, but also providing robust technology that helps with the visibility, that helps with the automation, but also that helps with the control of your environment from a corporate's perspective.
So you recently launched Reval Inside, a cloud-based software package. Banks have traditionally deployed the treasury function of core systems from vendors like MySys, Oracle and Temenos as part of their client offering. But Reval believes it has something more to offer. Could you expand on the benefits?
Happy to, yeah. So at Reval, for the last more than 3 decades, we've been focusing on cash treasury risk management for corporates. And we've always done that in different shapes. One, working with corporates directly, but secondly, also working with the banks. What we've recently started is really taking that vast functionality that we've built out in the Reval TRM cloud platform, and we've started to package that based on the way that we saw how different markets wanted to consume it. And the Reval Insight package is actually one of those, which is put together in a way that we saw banks actually want to consume that cash treasury and risk functionality. So it consists of the elements that we've touched upon, cash concentration, notional pooling, the incentive program, but then also cash visibility and cash forecasting technology. And this is what we take to the banks and actually work with them to enhance their corporate offerings. Now, the differentiators and the value that Reval brings are really threefold. On the one hand side, Reval sits on top of an existing, maybe legacy infrastructure for the banks. So it's deeply connected. Inside also talks to sitting inside the web portal, but also being integrated into the backend systems as one true global system. The second differentiator, as opposed to some of the vendors that you've mentioned, is a very quick time to market. So the quickest project that we did took us 4 months. Typical implementation would be 6 to 9, so that's actually very quick out to market with the new value proposition. I think the biggest differentiator for Reval is really understanding both sides of the angle and being able to bring that corporate expertise into the bank, learning from corporates on a daily basis what their requirements actually are, and turning that into technology that we can then offer to the banks.
Looking ahead, do you see more and more corporates and banks moving to the cloud? Two-part question really, which obviously we hear a lot about the benefits of the cloud, but still there are sort of concerns often around security. Two-part question there. Shall we start with the first one? Do you see more and more banks, corporates migrating towards the cloud? It's certainly been happening. We have a lot of high-profile instances so far this year.
Absolutely, yeah, absolutely. And for that, what I'm going to use is a study that one of Reval's investors, Northbridge, has been doing for the last couple of years. And in the 2015 cloud computing survey, what they found is when you look into SaaS, software as a service, which is one of the most prevalent areas of cloud computing, today 77% of all organizations use SaaS in some shape or form. That's also gone up 19% from 2014 to 2015. So 3/4 of all enterprises have some sort of SaaS today. If you look into the SaaS market as such, also very interesting, SaaS companies, the value globally from 2010 to 2016 has gone up by $130 billion. And also the financing for those companies has gone up by 400%. So clearly this is a market that is growing very quickly, and also the adoption goes up very quickly. So,
as I sort of touched on there, any major concerns, issues still, security?
There are. Yeah.
Do you see that still causing obstacles into the near future, or this is something that can be overcome fairly easily?
No, absolutely. From the same survey, they also asked what those top challenges are, and the 3 that were named are security, regulation, and also data privacy. I think data privacy is probably one where a lot is being talked about right now. So where does my data sit? What actually happens with my data? But also ultimately, I think what is the value of data, and how am I going to pay a price for the data that I actually give away? And if you think about the likes of Google and Facebook, they're actually showing how to really leverage the data that they're able to collect. Now, going back into the treasury use case, it's also a very interesting space around that very same question of data privacy and data use, because banks have a ton of data today, and most banks out there will have their big data projects running today, where we're at that tipping point of turning big data into smart data, actually figuring out use cases on how to use all the data that has been collected over the past years. And for the treasurer, it becomes a very interesting question. On the one hand side, the bank really has so much information, and the question is how can they better have it float back to corporate treasury. At the same time, the question becomes, does the bank actually also want to use that data to be able to provide even better advice, even better service to the client? Or does the bank want to say, well, I'm not going to touch your data, I'm going to hold it for you, I'm going to send it back to you? And this is really where the market splits into two different segments. And again, a client of ours in Germany, in that case, has been using that data for quite some time and really offers a full, trimmed down treasury management system to its clients, leveraging all that data, bringing all that data together, and giving that instant visibility to their clients.
You mentioned the research they're flagging up regulations. You feel that the regulators are sort of moving along with this a bit more, certainly in the UK. There's a lot of movement on the side of the FCA, in various different areas of the cloud, but traditionally an area that regulators very not shied away from, but were quite tough on.
Yeah.
Do you see a movement there to address obviously the concerns held by?
Absolutely, and we're still early on that curve, but certainly regulation is going to come in a lot more. Hence also the question mark or the obstacle from an uptake perspective, where is regulation actually going to lead us? So this is still being seen as an inhibitor to taking up more cloud software. At the same time, what we are seeing is that cloud has also shifted from a more tactical solution, might be used by your sales team, might be used by your client support team. But what we're seeing today is also that the IT teams are taking on cloud strategies, so moving this from tactical into a very strategic area. And this is what also drives me to believe that the uptake is going to go even further, and which is a fast-growing market today, is probably going to move into an exponentially growing market in the next few years.
Okay, well, thank you for joining me today, Gunther, for, as I mentioned at the beginning, our very first IBS Journal video interview. Thanks for watching, and don't forget you can find out more about Reval and Reval Inside at www.reval.com. That's www.reval.com.